Good day, ladies and gentlemen, and welcome to the show. Glad to have you guys here. Today's Wednesday, the 24th of March, 2021. Thank you for tuning in. Listen, guys, I come across a piece of information on the internet last night, and I wish I'd had it yesterday. When I was talking about a market crash yesterday, I was taking the biggest part of the reason why I was calling for a market crash or a market correction was the fact that U.S. Treasuries have been going up and up and up and up all month, and there's no reason to continue looking at the charts that they wouldn't continue to, the yields wouldn't continue to rise into the early part of next month and tread upon ground that would start to destabilize the markets. At any rate, I found out this piece of information last night. We're going to get on here and we're going to open up the charts right here. Treasury repo rout fueled by Japan's rush out of global debt. And this is what's happening. Over the past number of weeks, it's Japan that's been selling a lot of U.S. Treasuries. They are rushing out of global debt. It says bond bulls hoping Japan's deep-pocketed investors can arrest the global debt rout are in for a surprise. They are furious sellers to a degree that it's causing problems for crucial parts of the market's plumbing. Japan funds sold a record $34 billion of foreign bonds in the 2 weeks ending in February 26th as the nation's fiscal year end in March approaches, enough to cause reverberations in the United States repurchase markets for the 10-year treasuries. So what we see here is it's Japan. But the information, according to what I got last night, is that this is going to slow down this selling moving into next month, and of course we got to look forward to the SLR expiring, which could increase the selling again a little bit, but maybe not to the extent of what Japan's been doing. Well, this has a big impact or a big change could be a change in my forecast where perhaps we won't get this big crash or big giant sell-off in the markets next month because the bond yields went too high. Perhaps this will stabilize. I wish I'd had this information yesterday. Of course, I mean, all I could see is go by the charts of what's going on with the U.S. Treasury bonds. And let's take a look at the charts. If we take a look at this 10-year right here, and what do we see? If we take, just a second here. I get the chart out to where it is. Let's try 3 months, What do we see is up, up, up. Up, up, and away with the U.S. 10-year, right? And there's no reason to believe that this wouldn't continue. Well, maybe it won't continue. If Japan stops selling, because suddenly the treasuries could level off and stabilize and come back down maybe even below 1.5. The market wants to march higher, guys. It's buoyed on all this stimulus money. This was the big, these bond yields rising was the big thing. That was the big fly in the ointment for the markets going higher. And if this resolves itself, my forecast could fall that I had yesterday where the market's going to fall, could fall flat on its face because I didn't have that particular bit of information about Japan. Anyway, let's take a look today at the silver price. 25.20. It's up 18 cents. Listen, I hope I didn't confuse you guys too much because I hate to put out a forecast for something like a correction in the markets, and then all of a sudden new information comes in and it just kind of hits me blindsided, and my forecast, things like that doesn't happen very often on my channel, but it does happen once in a while. And when it happens, I got to get out there and give you the detailed information, the new information as I see it. And this is my responsibility on my channel for you guys, is to give you the detailed, clear information no matter what it is. I have to put it out there for you guys, so this is a correction that I see, the fact that I get information that the selling was, a lot of it was coming from Japan. Okay, 25.20 for silver. It's up 18 cents today. And you can see a little bit of relief in the markets today because these treasury bonds are leveling off. They're not going to infinity. 25.20 for silver. It's up 18 cents. What we've seen the last couple days was ferocious selling on the part of traders of this SLV and stuff, and it was driving the price down lower and lower. This created a possible buying opportunity for some people who could have got in there when it was even down below. I think it was below $25 for a little bit there. Like yesterday, it was down to like 24 whatever, for silver. That's if you can get some, because it's awful hard to obtain. Let's take a look at gold today. $17.29 for gold. It's up $2.30, guys. So everything's starting to rebound a little bit there in the gold silver market. Let's take a look at crypto. $17.42. Crypto's rebounded a little bit. It was a bit lower than this. It's back up to 56.7 for Bitcoin, with a Bitcoin dominance of 60.8%. Now, let's take a look at the Dow Jones today, and she's up 288 points. 32,711. What you can see by this, though, is the whole world's markets now are all interconnected. If one person does something in the markets, it can have an effect on all of the global markets. Like if Japan is selling U.S. treasuries, that can have an effect on all of the world's markets. It's all globally interconnected now, the markets are. 281 points to the upside for the Dow Jones. Crude oil, $60.13. And you see crude bouncing back, $2.37 today. The MOVE Index, 60.77 on the MOVE Index, and it's going along sideways, but it's starting to turn down now again. It was getting up near 70. It's down 6.85% today. Oh no, 6.85 points, I should say. Down 10% today. The MOVE Index. Down is good, by the way, on the MOVE Index, guys. That means the credit markets are more stable. Let's take a look at the U.S. Treasury today, and what we're seeing is a 10-year at 1.63. Let's go back and take a look at all of the treasuries, and what we're seeing is movement generally to the downside on U.S. Treasury yields. Yields are backing away a little bit. U.S. 30 years at 2.33. And now let's take a look at the U.S. dollar index. 92.49 on the U.S. dollar index. And we see it's not climbing as fast as it was. It's starting to level out a little bit today. So listen, guys, thank you for listening to my show. Like and subscribe. Give me a thumbs up. Hit that notification icon, and if you're not already subscribed, hit that subscribe button. I really appreciate it, and we'll catch you guys in the very next episode. Bye-bye.